Hi everyone, let's talk about the opportunistic versus the mechanical options trading mindset and really the successful and the failure and the failing trader basically. And this is what I would say is the secret in this whole business because most people just want to be mechanical and it might work for quite a while, but then it's not something that will work long term. Doesn't matter what kind of risk management you might have, you will end up losing quite a bit if you're just mechanical, and it's just the way it is. There's no way around it. And I want to talk about exactly why being opportunistic will give you better results and way less risk. And I've been on both sides, and I'm obviously very opportunistic, which is the way you should be if you're a trader or if you're really in any other business. You cannot just do the same thing over and over, be mechanical, and it will work for you, which is mechanical is CH, not HC, my bad. But yeah, if you want to be mechanical, trading is not something you can go for. And I know some people have some success being mechanical, but this is not the way. This is too much risk, and inevitably it's not going to work out the way people think it will. So this is the mechanical approach, and usually this is what I've witnessed so far. It's open big positions, and usually many of them to a point where you're using 70-80% of your margin at a time. Now, very high correlation between the trades, or very high correlation to the overall market, to the S&P. So people might open a bunch of positions on the SPY, then open some positions on Nvidia, and so on and so forth. It's all heavily correlated. So if something goes wrong, the entire account goes wrong, and you don't ever do that. This is a terrible thing to do. You definitely want to, if you already have a few positions opened, you want to have them not little to no correlation between one another. Now, this is a big one. Mechanical traders usually ignore fundamentals. They don't care what's going on. They don't care if they're trading really a piece of garbage. They don't care about it at all. And they're not trying to understand the market conditions, which is everything in trading. If you don't know what market you're trading, or you don't, in my case, understand the supply and demand fundamentals of the commodities that I'm trading, you have absolutely no chance in making any kind of progress in this business long term. Now, making outstanding returns, which is very true when you're a mechanical trader most of the year. So because usually most of the year, let's say for example, people sell just puts or the 112 on the S&P or on the ES, and it just goes well most of the year because usually the S&P or the ES are going up most of the year, most years. So you're making really good returns. Sometimes some crazy returns over 100% in like 8-9 months. But then there's a point on the weekend something happens and they're taking a massive loss on the account in just a few days. It happened over and over. October 2nd with the Trump Liberation Day tariffs. People just did not, like a lot of people that I talked to, did not really just take it into account, didn't care at all, and they lost so much money, everything they made in the previous year, sometimes even more. And this is just not how you can trade, because these things, they will keep happening. Before that, we also had, I believe, December 18th, when the market crashed a little bit because of the Feds, because they announced they might not lower interest rates, if I remember correctly. And then before that, on August, when the Japanese market kind of failed, and people that had a massive exposure to the S&P just took massive losses on these puts, and it just did not work out. And this is part because the positions were very big, and there was too much correlation. And there was really no thought about the fundamentals at all, or what might happen, or what usually happens with the S&P, because this is not surprising, right? And even if it is, then you should be ready for really any scenario. You should have a plan for anything and everything. So another thing is expecting one strategy to work indefinitely. So this is again something that happens quite often. People just look for that one strategy, which they can do copy paste very mechanically, like a robot, like basically like a bot, and it will just keep making the money year in and year out, which doesn't really work, unfortunately. But this is what this is what the mechanical traders looking for. This is how they are, and they are looking for the easy way, 100%, where you don't have to think too much. You just do something and you think you'll get rich from that, which is just not how it works. Maybe it used to at some point, but it's way more sophisticated at this point. Now, the opportunistic approach, which is, in my opinion, the only approach anyone should have, and I think all the best traders and fund managers, they are very opportunistic. They understand what's going on. They understand that maybe a certain pattern might work for a certain time, and they have frameworks to understanding when is it going to work, when is it not going to work, and when it works, they're very opportunistic, and they enable that approach, that strategy. And a strategy is just a tool at the end of the day. You need to understand when to apply it. Now, the opportunistic traders usually open very few positions, and only the best opportunities, only the ones that really have a high probability of profit. It's like the Vikings always said, they only go into battle if they know the odds are clearly in their favor. And this is why the Vikings, despite having, basically no professional fighting training, they had very bad tools, no armor, but they were still beating bigger armies with more fancier tools. And this is because they were only fighting if the odds were clearly in their favor. This is how trading in any business should also operate. Now, there's little to no correlation between positions. Obviously, it's a big one. And figuring out fundamentals and market conditions all day. So this is what I do. I just try to gauge what's going on all day based on the news. Is it critical, not critical news? Do we have issues with the supply or with the demand? So on and so forth. And it's really not that hard. It's really, honestly, it's really simple and common sense. But it has to be done. If it's not done and you just trade without the fundamentals, you have, again, no way of making it. Making moderate, steady returns all year. So it's usually slow and steady, but this is how you really, get into, big money territory. Everyone just wants slow and steady returns. This is what big money wants, because at the end of the day, you should always chase capital and not returns. This is also a rule of thumb in this business. Taking little to no losses. This is, again, by following changes in fundamentals and understanding what's going on in the market. And sometimes you see if there's a possibility of something happening via the fundamentals. Let's say you have a strangle and the price might go up sharply because of some kind of piece of news, or because a piece of news indicated there's some issues with the supply, and you anticipate price might go up. So you can just gonna go ahead and hedge your position aggressively to the call side. But again, this is only if you go ahead and follow fundamentals, and this way you can really lower your risk for myself, it's been 2.5 years, or actually 3 years at this point. I've only had 3 small losses, right? Which speaks for itself. And working with multiple strategies, and like I said, strategies are just tools. They can be fancy, they can be pretty simple. At the end of the day, you need to understand when to use these tools and for what job. Like any mechanic, right? You cannot just use a screwdriver to swap an engine, for example. You need different tools. You have to have a variety of tools. You need to know when to use what tool to get the job done. It's exactly the same thing, and it's really, really simple. Now, last thing is looking for the best way to preserve capital. So this is the mindset that I have personally as an opportunistic trader. I want to preserve my capital. This is the number one thing I want to do. And as a result of thinking this way, yes, I'm not making a huge return, obviously, but it's very moderate and very steady. And I'm protecting the current capital that I'm working with. So this might be unpopular. A lot of people might not gonna like this video, but it is what it is. This is the truth, and most people already know it is the truth, but some people just kind of ignore it, and they just want the easy way out, and it's just not gonna work, unfortunately. Thank you again for watching. If you have any questions, let me know, and I will be happy to share more and more of my thoughts. And if anything, I can also make a follow-up video. So thank you again, and I will catch you in the next one.